Coming up today, stocks finish lower on the back of Walmart guidance, Alibaba rips on earnings as more investors get into the stock, a preview of Nvidia earnings, and everything else happening out there today, guys. You don't want to miss this one. Let's go. And welcome back to Click Capital, everybody. Pretty weak day out there in the stock market. All indices finishing lower in the red. Market's still stumbling along a bit here, a bit soft. Looking across market breadth, a lot of stocks were down today. Still got a few moving up, plenty of dispersion out there. But we did see a little bit of a defensive rotation. Industrials coming off. The hot financial sector of late, finishing a bit lower there today, along with retail stocks as well, on the back of Walmart results, which I'll get into in a bit. But actually holding up, one of the best healthcare stocks, utilities pushing up, and we actually got a slight little breakout there today on REITs. But what I think spooked the market a little bit today was Walmart's results. Even though they came in line with expectations, even given a slight little beat there, the market didn't seem to like their guidance. Renewed worries about consumers, as Walmart is a bellwether for the US consumer. Potentially some worries over tariffs maybe. Some saying it may even have to do with weight loss drugs. GLP-1 drug sales continuing to pressure margins, like we've seen in a lot of snack makers over the last couple of years. But they still hiked their dividend by 13%, but lower priced products were growing better. Groceries, they didn't really give any guidance around tariffs, so they'll be able to navigate that. But they expect first quarter earnings to be around 57-58 cents a share, down from 60 a year ago, which would be the first decline since April 2022. Also interesting to note that Amazon surpasses Walmart in revenue for the first time, beating them by about $7 billion in the last quarter. And this has kind of sent a few ripples throughout the retail sector today on some other notable retail stocks. Little slip there for Target, however, it's already been under pressure. Bit of a decent pullback there for Costco after a hot run, and the entire retail sector coming off a little bit there. However, with Walmart, like I said, the guidance wasn't all that bad. It's not like the consumer's fallen off a cliff or anything. Their sales still grew year over year. I think it's more of a case of some hot air coming out of this stock, because if we just go out to a monthly chart and expand it here, we can see how stretched it's gotten. Starting to look like a high growth software stock or something, not a huge consumer staples kind of elephant of a company that over the last year more than doubled in price. And so it's had an exceptional run, and it's probably not a bad time here for the bulls to take some profits off the table, because just looking at Walmart's valuation, like I said, crazy for a big discount retailer. Forward PE 43. That's basically implying an earnings yield of around 2.5%. Might actually be better off in treasuries at 4.5% over the coming years versus Walmart stock. And price to book of 9, trading at 25 times forward cash flow, dividend yield under 1%. Again, that is very expensive for a stock like Walmart. Even though they are very profitable, the stock price has momentum. Analysts had been increasing their estimates. That may have changed a bit today on their guidance, along with their growth score already weak as well. Like I said, if I was long the stock, I would be taking some profits here if I hadn't already. That brings me to my next stock, Palantir. Similar look on the monthly chart, super stretched. As you guys know, I put on a hedge late last week, had a nice fall overnight, and just expanding the chart here, we can see it actually took out that low from the day after the earnings gap, around 99 a share. However, just going down to a 15-minute chart, we can see that dip was bought, giving us that hammer candle formation on the chart. So I was looking at this just before close. Looked like the market did a strong buy the dip, hammer formation. My instincts were telling me to get out of the trade. So I ended up closing the entire spread for a little under $10 for about $1,000 US profit, as I entered it at a 4-cent cost. And so again, I wouldn't be surprised to see it come up and retest 120, even potentially poke its head above that to 130, which again, I may put on another similar trade at that point. I'll just have to wait and see how it trades up there and whether it still looks good to me. However, this does look like a strong buy the dip candle that we have seen before in the past. And so if I wasn't already in the hedge, I wouldn't put it on here now. And that's kind of a way to keep yourself honest in a trade. If you're deciding whether to get in or get out, ask yourself, if you didn't have the trade on today, would you put it on? And so I normally don't like to trade off one candle. However, that isn't a candle or price action that I was short. And so I could be wrong. It could still topple over tomorrow, next week. Anything can happen. However, to my eye, that looks like the market could have defended that 99. We may be going up for a retest at least, and we may not actually get that earnings gap fill. Like I said, I was looking for it to come down to about 85 or low 80s to exit my spread, ideally at a $3,000 profit. However, I won't argue with a $1,000 profit over a couple of days. And again, it's just one of many trades. And I'm still looking around for other similar setups to add hedges. You're welcome to post a comment below this video of any other stocks you think could make for a good hedge. Maybe something that's really overvalued, vulnerable for a sharp pullback. And if you're interested in these sort of trades, trading stocks and options, subscribe to this channel as I make these videos every day after market close and share some of the trades I've been taking. And so again, like I said, I exited this spread just before close, and I can see it's falling a little bit after hours. But again, going out to the monthly chart, I still think it's vulnerable for a sharp pullback. It's just timing tops is very difficult to do. But like I said, if we do come up to that 120, 130, I may take another stab at it. Another stock we've been following around here, Alibaba. Once again, just charging higher. This thing has just come back from nowhere, stumbling along for quite some time. And believe it or not, it's almost on its way to doubling just over the last month. But they did come through with pretty good numbers on their earnings results today. Stock up over 8%, as it appears the market is really waking up of late to China's AI potential, with Alibaba set to play a key part in that. Just after we saw the meeting over the weekend of Chinese leader Xi Jinping, meeting with all the tech heavyweights, telling them he's got their back, now wants to get behind them. And there's a look at Alibaba's latest quarter. Total revenue growth wasn't all that massive, still high single digits. Really good growth in their international digital commerce. AliExpress still crushing it. A healthy profit there. They had been buying back a lot of shares over the last year while they were super low. In addition to Jack Ma himself, the company and the owners were buying the dip. And now we've just got news that the meme stock king, Ryan Cohen, has significantly boosted his Alibaba stake to $1 billion. This is the guy behind Chewy.com. He's also the CEO and chairman of GameStop, closely followed by all the Wall Street bets traders, and he's been building his stake in Alibaba over the last 2 years. Looks like his patience has been rewarded today. Who else has been rewarded today is the hedge fund manager who bet as heavily as he could on China, investing almost half of his portfolio in Chinese securities over the last couple of quarters. David Tepper, his biggest position, Alibaba. I'm sure he's feeling pretty good today. He's also got Pinduoduo, JD.com, FXI ETF, KWeb, Baidu, and interestingly, a smaller position in Taiwan Semi as well. Now Alibaba's starting to look really good on the monthly chart, like a classic rounded bottom base, breaking out above multi-year resistance here. But its peers, just looking at the KWeb, still lagging a bit behind, but pushing up on that resistance zone. Unbelievably, still trading at the same price from more than a decade ago. Are we going to see the huge closing of the gap between the Chinese economy, which has grown leaps and bounds since then, and their capital market valuations? Staying on tech, we've got Nvidia's earnings next Wednesday, be the highlight of Q4 earnings season. Stock's still bumping around after the DeepSeek freak out a few weeks ago. Be interesting to hear what they say about that. I'm sure they'll beat expectations. Listening to insiders in the industry, demand for Blackwell is still off the charts. Pretty sure they'll sell every GPU they can possibly make. The biggest hyperscalers reiterated their capex spending, showing no signs of slowing down. And in fact, we've just had the latest version of Grok come out 3. And I agree with Michael Dell. It's awesome. The rate of improvement is unmatched. I was already starting to use Grok a lot more of late, but doing some testing in 3 is definitely giving some better responses and understanding compared to GPT. And so it's not surprising to see it at the top of the charts. In the Apple App Store, it's powered by a supercluster farm of over 200,000 GPUs. Elon said he wants to take it to over 1 million. And while we're on the subject, just looking at Tesla, still bumping around here, even though we got those reversal signals in the golden pocket of this swing. Still not really a convincing looking bottom here. Wouldn't be surprised if we come down and retest, maybe even take out those lows at 325, as the stock is still under pressure from negative headlines throughout the media. Still making our way through the back of Q4 earnings season. Celsius holding, which I told you guys yesterday, got a big bounce up and was looking good on my fundamental indicators, showing as undervalued, even though they completely missed on earnings. Again, the market could do something completely different. Just going down to a 5-minute chart here after hours, smoke show, up over 34%. This was a really previously loved stock last year, but I think a lot of people bailed on it as it had a monster drawdown. Also come out with news, they're going to acquire Alani Nutrition for $1.8 billion. Their largest acquisition, boosting its US energy drink market presence. Kind of similar moves to Hims and Hers Health yesterday with their acquisition. We got their earnings early next week. And after their Super Bowl ad, this company's kind of on its way to becoming a bit of a household brand in America for telehealth. Market cap still only $14.5 billion. Definitely has room to grow. However, I wouldn't be surprised to see a little bit of a pullback on earnings, even if they are good numbers, just because it's gotten so hot over the last month. And so just getting back to the market for a minute, looking at the SPY, pretty much been going sideways for a few months here. And like I noted on the Russell 2000, it's actually over half a year, pretty much been consolidating. Still below that election gap up. Mid caps and many other parts of the market as well. So we've got a lot of dispersion out there. Just looking at some seasonality. Over the last 15 years, March is one of the best performing months, especially if you took out March 2020 due to COVID. It would be right up there at the top as one of the best performing months of recent times. The last 4 Marches we got were positive, and the S&P did finish higher in January. We're still a little bit higher now in February, but over 1%. If that were to hold up into the end of next week, the end of this month, February, looking back in history, when the S&P is higher in January and February, March can often be positive 72% of the time. Even better is the final 10 months of the year, higher 93% of the time. So looking at all type of seasonality pattern, what happens at the start of the year are some of the most accurate predictors if we're in a bull market and we have a good January and February. No doubt we'll have some dips in between. Most years we do get a 10% pullback, but it's interesting because looking at the S&P, we're still not that far below all-time highs, within an inch really. There's still plenty of bearish sentiment out there. In fact, the latest AAII investor sentiment survey that came through last night, bearish readings did pull back, but we're still well above historical averages by about a third. Most of the time investors are feeling good, but bullish readings are still pretty subdued there at 29%. So not everyone's convinced on this market. But again, just looking at the S&P and the VIX index, it's had quite a few things thrown at it over the last couple of months, but it seems pretty resilient. Those big gap downs have been bought. We are kind of consolidating. We're still kind of waiting and seeing of what tariffs is really going to do. As we've seen, Chinese stocks have been ripping in the face of it, but also the Fed is still up in the air on their path of interest rates. If they were to have to get hawkish, I think that could give us a quick 10% correction in the market. But no doubt the Walmart news and pullback in that stock probably spooked investors a little today. But like I said, I think that's more of a case of hot air coming out of Walmart stock itself. Haven't got a whole lot of economic data out this week. We get PCE and GDP data next week, top of Nvidia's earnings. And we've still got bond yields bumping around 427 on the 2-year, and a weaker dollar as well, as it has been for a few weeks now. Interesting today, stocks were weak, got a little bit of a bump up in Bitcoin. Is it time for cryptos to catch up? Same with Ethereum as well. Could be a bit of a make or break moment here for it. Do have a bit of a bullish divergence on my DSI, and what looks like a massive buy the dip on this big wick candle here, back on the 3rd. However, still technically in a short-term downtrend, so if we were to take out this support, we may come back down and retest 22. Otherwise, we could be setting up for a fat green candle. We do have some bullish seasonality in the cryptos over the next couple of weeks, with Bitcoin as well, looking back at how it trades and this calendar period going forward. Interestingly, same deal with gold and silver, which has been inching higher. Bit of bullish seasonality forecast over the next calendar month, 21 trading days. On average, silver will go up 10%, looking back the last couple of years, the same calendar period. And just as a quick reminder, if you want to get this seasonality forecast indicator inside your TradingView account for free, click the link below this video, or just go to my website, clickcapital.io/free. All you got to do is enter your email address and TradingView username and give us a few hours, and we'll add this indicator free to your TradingView account so you can use it as well. And so it works on every asset on the daily time frame inside TradingView, and you can change all the settings as well. And so we've got the dollar weak, potentially giving a bit of a tailwind to silver, gold, Ethereum, and Bitcoin, in addition to the bullish seasonality they've got in them. And there's quite often a bit of correlation between Bitcoin and the NASDAQ, and the NASDAQ's actually the best performing index at the moment. Tech stocks just broke out a few days ago actually, and we can see that in a spread of Bitcoin versus the Qs. May have just found support and bouncing off here. There's not a whole lot out in news today, so I thought I'd share with you guys this video that just came out from Figure AI. They're pretty much the second largest developers of humanoids after Tesla. Still a private company, haven't gone public yet, but they just posted this video of Meet Helix, our in-house AI that reasons like a human. Robotics won't get to the home without a step change in capabilities. Our robots can now handle virtually any household item. So it's pretty cool. They just showed this example video here of a guy coming home, handing off his groceries to these two humanoids, and they can already recognize them and place them away where they're supposed to go. And so Tesla hopes to sell their Optimus bot for $30,000. Whether they do or not, that's still a price range that many consumers will justify, especially if it saves you time and you can use that time elsewhere. And like any technology, it always starts off expensive and just gets cheaper and cheaper. But anyway, I thought that was pretty cool. And just looking at robotics stocks, they're still pulling back. I actually bought the dip on Rich Tech today, added a few more shares. Keep in mind, this thing is massively volatile. I wouldn't be surprised if it does trade back down in the ones over the coming weeks and months. Just looking back at prior patterns, can have these big rips for a few weeks to a month, and then it can just fall over for a few months, rip back up. So just going out to a 3-day chart. So it very well could do a similar path, could continue pulling back before maybe we get another rip again, possibly towards the end of the year. And what I think could really light up the robotics sector is when we get a firm date on when Optimus Bot is set to be sold, which is hopefully early mid next year. And once the market knows that, robotic stocks get excited and rip into that, based purely nothing on sentiment. And of course, assuming the market is still holding up and healthy as well. But like I said, this is a speculative bet of mine. It's not financial advice. Please do your own research before you make any investment yourself. But again, why I like this stock is because no doubt it's still very early stage. At a market cap of 282 million, I just think it's an asymmetric bet. There's a lot more upside than downside. And if they're actually able to prove their Clofi and T concept and it does well and it makes money, other businesses start getting their Atom robots, their one-armed Scorpion, along with their Medbot throughout hospitals, Maitre D, robot waiter, the Titan, a lot of mechanics are already using, and their cleaning robots. That'll win a few more contracts and positive developments along, like I said, enthusiasm towards the release of Optimus Bot next year. This is one of my favorites in the space. But again, it's not for the faint of heart. It's going to have wild swings. Like I said, I wouldn't be surprised to see it trade back down in the ones and potentially bump around for a few months. Looking at other themes throughout the market, we've still got the nuclear trade pulling back here, along with battery stocks, space stocks as well. Some of these hot stocks of late having a bit of a pullback. AI as well, bit of a sharp pullback. Biotech stocks today, they're always super volatile. But the best performing group out of them all, Quantum, on the back of Microsoft's announcement yesterday. Apparently they created a new state of matter. Topo conductors, saying quantum computing is closer than what we think. A few of these stocks caught a bid here today on the back of that. 3D printing coming off hard, along with cybersecurity. EV toll stocks still bumping around. Like I said, it was actually crypto in addition to quantum computing, showing a bit of support there today in an otherwise weak tape. So maybe time for cryptos to catch up. Otherwise, like I said, guys, not a whole lot out there today as we head into the last day of the trading week tomorrow on this shortened trading week to get a little pop up there in the VIX. Do have some manufacturing PMIs coming in, but option dealers are pricing in a pretty sleepy finish here at 11.2 VIX one day. And other key stocks like Nvidia just bumping around. Market may be going into wait and see mode, not only on their earnings next week, but also PC inflation, as the Fed is still very much caught in the middle of what they're going to do next. So we may indeed get some moves in the market next week. Otherwise, still a little soft for now. Still plenty of consolidation out there, and we'll see what the last day of this shortened trading week brings us. Thanks very much for tuning in again, and I'll see you again this time tomorrow. Cheers.